Well, I mean, like, look, who doesn't have like some regret having not bought Bitcoin back at $1? All right, so I wish I'd known Apple from when I was a child too, but I don't. So there's always, all I know is that if I could replay history, we would have done much better. Now, having said this, in all seriousness, a number of my colleagues are very excited about crypto, and they're excited about it for a litany of legitimate reasons. You'll see Citadel Securities start to make markets in cryptocurrencies. I think in doing so, you'll see another very responsible participant in the market that creates liquidity. I do think that the Terra Luna just catastrophe should be a wake-up call to DC to actually focus on thoughtful regulation. And in particular, stablecoin, by virtue of its name, almost demands being appropriately regulated. Bloomberg's done some phenomenal work on Tether. What's behind Tether? The fact that we don't know is utterly absurd. So if you're going to represent that you have a stable coin that's worth $1, you better damn well be able to back it up with custody accounts that show you the assets that define that stability. And the Terra Luna fiasco, I mean, you saw people lose their entire life savings in 2 days.
But do you think was it almost like a run on the bank? Is it the beginning of the end, or will we see more regulation?
I'd like to see thoughtful regulation. I'd like to see the SEC really carve out their view on what is a security, what isn't a security. The market, I think, after all these years, deserves certainty in that dimension. And then just as we have daily disclosures of the ETF holdings, we should have periodic disclosure of what backs the stable coins so that people know if their money's safe or not.
Ken, talk to me about Melvin Capital. So it's giving up and shutting down. Did the founder speak to you before?
I did not speak to Gabe in the last couple of weeks.
Was it the right thing to do, though, to shut it down?
Look, this is Gabe's business. It's Gabe's personal decision. I'm not going to second guess his choice in life.
But what does it mean for hedge funds in general? Are we going to see more episodes of some of these retail investors?
Well, I mean, the average hedge fund lives for about 3 years. So several hundred shut down a year, and the world goes on. Gabe was certainly an iconic investor over his career. Over his career, he did an incredible job for his investors. Kudos to him. We all react to adversity in different ways. He went through a really tough run. He chose a decision that worked for him.
What's the overall thinking on these retail investors, though? Are they back? Was it a black swan? Is it something?
You mean the whole sort of meme stock phenomenon that got Gabe in trouble in GameStop last year?
Yeah.
It's probably a moment in time. Replay the history. You've got this enormous stimulus program from the federal government, sending checks to tens of millions of American households. And a fair number of those households did not need the cash. They put it into the stock market. And people were looking for connection. They were looking for something to be involved in. You had the rise of the Wall Street bets and the whole Reddit phenomena. And I don't want to say our stock market devolved into entertainment, but there was certainly an entertainment dimension that came into play with money that was in some sense just dropped out of the skies into people's wallets. And they took a run at the stock market and GameStop and AMC and dozens of other meme stocks. I'd like to think it was a moment in time. I'd like to think that's the case. It's not how capital formation works best. And frankly, a lot of it came from a place that I don't think it was very healthy, which is like, let's try to take a firm like Melvin and put them into bankruptcy. Like, great. So you basically help wipe out the pension plans of teachers. You feel good about that? It's not Gabe's money that you're taking down. You're taking down the money of a pension plan that belongs to a teacher. So I don't think it wasn't a very good moment in American capital markets history, but I think you have to replay history and go, where were we as a country? And people were locked up in their basements, kind of losing their minds.
So it's a COVID phenomenon.
It's a COVID phenomenon.
Have you been on Wall Street Bets?
Of course I have.
And?
There are some great videos of them trying to attack Citadel. I noticed that we always seem to stand in the end, but there's some really great videos done.
Such as? Now, everyone's going to Google instead of listening to what you have to say.
You can go Google and have fun on Wall Street Bets, entertain yourself.
Ken, talk to me about regulation. Is there any part of the regulation that the SEC is going through that you think is a good idea?
Well, I'd love to see Gary Gensler pivot from talking about regulating cryptocurrency to actually giving regulatory clarity. I mean, from my perspective, that has been the giant regulatory failure of the last 2 years. We've seen $1 trillion change dollars wiped out of value in the crypto space. We saw the Terra Luna disaster just like hit right at people's pocketbooks in what they thought was a stable investment. And we still don't have regulatory clarity around crypto. So number one is the SEC has got to address this issue. And whether it's them on their own or in partnership with the CFTC, the markets need more clarity in crypto. And with more clarity in crypto, you're going to see more of the tier one firms able to provide liquidity, able to provide research, able to help enhance price discovery. That will help the market mature into whatever it's going to become. But you want your tier one firms to help make that maturation process happen. That comes with regulatory clarity. I think the meme stock phenomena, we spoke about it for a few minutes here. I think the SEC was in a really tough box about how to handle that moment in time. Freedom of speech issues come into play. Really hard. I mean, it was very clear that some of the trading had in its basis this idea of hurting others through short squeezes. It's borderline market manipulation when it gets into that level. But I think that's really tough for the SEC to have addressed. I don't know what they should have done on that front. It's a really interesting intersection of First Amendment rights, social media, and financial markets. And I just don't have the right answer to this because I'm such a huge believer in First Amendment rights. I think that's really dangerous area for us to tread in terms of regulatory matters. And then the regulatory agenda for this year, they dumped 700 pages of new regulations into the market as my holiday present for all of us in this room. We got that present.
Did you read it all?
I have not read all of it. I have other things to do with my life, but I've read a lot of executive summaries that make me want to cry. And it's a lot of regulation with reasoning behind it that I don't understand. You often see regulations, you go, I understand what they're trying to get at. And for much of this, I don't understand what wrong they're trying to right or what information asymmetry they're trying to address. And so that's very worrisome to me because the United States, with debt to GDP at roughly 130%, with a wall of entitlements ahead of us, Washington, in every dimension, has got to be focused on grow the damn economy. If we grow the economy, that will help on the inflation front. That will help bring more people back into the workforce. That will help us address the promises we've made to those who are going to retire. And yet, out of Washington, the current rhetoric and action plan is about slowing down the ability for our country to move forward. I mean, this idea that we're going to tax companies as being anti-inflationary is the most absurd concept I've ever heard of. We're going to tax our companies that need to invest in CapEx, invest in hiring people, invest in training their workforce, which all this will happen in smaller quantities. We're going to tax these companies, and we think that's going to reduce inflation? I mean, just go take out a simple economics book, for God's sake. So I really worry about where we are on the regulatory front right now because we need to go the exact opposite direction. We need to encourage investment in capital and in people to grow our economy to meet the promises that we've made to the American citizen.